Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant, with me my colleagues Sonia and Nigel. And guys, thank God it's Friday, right? I mean, what a crazy, volatile week this has been. And, we saved the best of the worst, how you look at it, for the last, right? With that big, raging overnight reversal and extraordinary moves, which we are going to react to this morning. I, for one, am pretty glad that you got one more day to report for, and then we get a break before we come back. Let me just quickly tell you what happened. The S&P 500 rallied 5% from the day's lowest point. 5%. It ended 2.25% higher. That is a huge move. Positioning led reversal, raging reversal across markets. I'm talking about, when I say markets, asset classes, I'm talking about rates, dollar, raging reversal. Post the US CPI, a big dip and then a big reversal. And I think the question which Indian bulls and viewers will want to know is, was last night in the US the start of a strong short covering bounce which can rub off here in India as well? Or this is a move which will get faded on day 2 or day 3? I think that is basically the big question which we will try and get you perspective on as we go along. This is the reversal that I'm talking about, right? Look at that. The S&P 500 low was 34.92. This is last night's low. We closed 5% higher from there at 36.70. The dollar index fell from 114 to 112.4, and the 10-year, actually the rates market movement was the smallest. 4.1 was the high, and we closed around 3.95, 3.96. These are very large moves which we are going to react to this morning. Sonia, hi. Nigel, hi.
Hi, morning, Nigel. Morning. It was, what, a 1,400-point recovery that the Dow saw in one session, right? Behaving like the Bitcoin, perhaps, the kind of volatility that we've seen. But I know everyone's going to talk about the global cues and the kind of impact it would have on our own markets, the pullback, etc. But for me, the other big trigger this morning, and a positive one at that, is Infosys and what it reported. Not just did Infosys raise its FY23 constant currency revenue guidance, but it ticked all the right boxes, at least 9 out of 10, right? So whether it was an earnings beat, very strong deal wins, an attractive buyback, and Infosys has a valuation headroom as well. If you look at it, it's trading now at about 22 times forward compared to the 2-year average valuations of 27 times. So there is some headroom for Infosys to move on the upside, and that perhaps could take the market sentiment, or at least the IT stocks with it. In fact, Mindtree reported a beat on all parameters as well. So these are two stocks that could dominate Mindspace this morning. But yes, of course, coming back to the larger picture, there was a sharp rally in the US. And one would wonder, despite that inflation print, how come the market moved up so much? I think it was after 6 straight days of a fall that there was a pullback, right? So from oversold levels, this is the kind of move that we've seen. Whether this sustains or not, only time will tell, because the overarching theme is still persistent inflation that remains a problem for both the Fed and investors. It will be very hard for the Fed to bring down inflation to 2% as per their timetable. So perhaps this rate hiking cycle is something that could continue, but that's a story well known and well documented. So let's see how it goes. The other thing that enthused me was the quantum of FI selling has reduced. So on an average, in the preceding 4 days, FI sold about 2,500 crores. Yesterday, that reduced to 1,630 crores. So the cues are stacked up in favor of the bulls. But let's see after that initial gap up opening what happens. For now, at least, things are looking good.
We were saying this yesterday, that the chances of a move higher after the market falling for so many days in a row is much higher than the market actually going south. And that is kind of played out. It also shows you that, if to react to the same bad news again and again in equal ferocity doesn't happen when you've got these kind of conditions. But let me quickly outline the bad news first, right? The good news, which was the bad news. The US CPI number basically means that a 75 basis point hike in November is locked in. There's no chance, there's no deviation from that. But what has also happened is that there's a sizable chance that we get another 75 basis point move in December. This is market pricing I'm talking about, not what an economist here or there is expecting. This is market pricing. And market pricing also suggests that terminal rate, right, is now approaching 5% by the second quarter of 2023, and only a 50 basis point cut into the end of 2023. This is the bad news. The good news, right, is that the market rallied aggressively. But what was this rally based on? It was based on extremely oversold conditions and very, very positioning led. I think that should be absolutely clear. No one should look at the screen and say, well, this is the start of a new bull market or anything, or this is the start of, the fact that conditions are improving rapidly in the US. It is not. there is more tightening coming, but the market has rallied despite that. So will you follow the price? Will you follow the data? I would say, at least in the near term, you follow the price. But the price has to give you further confirmation. The S&P 500, by the way, saw a bullish outside day from the 3,500 zone support, 3,500, 3,525 odd zone, which is technically a powerful signal. So there should be more here. The problem is, as we've seen, and you don't have to go back very far, the last Friday we had the jobs data, right? Jobs data was hotter than expected. What happened on Monday? The market rallied. And then on Tuesday, it sold off. So day 2 of the reaction has been critical, has been crucial. But it doesn't have to repeat exactly that way. Here in India, for example, we've been highlighting this. FIIs have been sort of net short. The net short position has come off to about 1.2, 1.25 lakh contracts. FII, the client long positions, which is HNIs, family offices, retail, everything. I mean, you could call that client long positions perhaps as smart money. That is at a record high, 1.5, 1.6. So the retail sort of positioning in the future segment is positioned for this move higher. And this setup is usually indicated that perhaps there is a bit more on the upside before things start to cool off. So this is important. I would say, without trying to second guess whether this rally in the US will continue and then the rub-off here will happen, I think the way to think about this is that we've been outperforming US in any case, right? I mean, there is huge amount of outperformance we are sitting on. When US rallies, we rally harder. When US market falls, we fall less. What this setup does, I mean, this bias of upward move in the US does, is it provides you comfort if you're going long, that the market is not going to sell off aggressively. So I think look for trades on the long side. A few levels just to wrap this up. The Nifty has resistance at 17,260 and the next one at about 17,430. These are simple sort of retracement levels from the high of September to the low of September. And the support is, again, very simple at about 16,950, which is nothing but the low that we've seen for the last 3 days. 3 days in a row, we've hit 16,950, 5-10 points here or there, and the market has bounced, yesterday included. So keep that as a reference point on the downside. Nigel, what are you watching out for?
Well, the ingredients are there for a good short covering bounce. The US markets, they bounced overnight. The dollar index that initially went to around 114, that's cooled off to around 112.5 odd. And the good news actually is that the FIs are net short on the index yet again, which may not be such a bad thing. Now, post-market, you normally look at the institutional data. And yesterday, the institutions were net sellers to the tune of close to around 900 crores approximately. And the FIs, they added 6,000 short contracts. That takes their short positioning to around 81%. The buy zone is very clear. On the Nifty, 16,950. On the Nifty Bank, which has been the driver, that's at around 38,500. You'll be a little disappointed that yesterday the Nifty Bank came in for a bit of a knock. Well, don't be so disappointed because yesterday there was some unwinding of positions that we saw on the Nifty Bank. The reason I say that these two data points are important because the last few days on the Nifty as well as on the Nifty Bank, that 16,950 and the 38,500 mark, that's held out. Now, the options data is quite interesting, and that's giving me a sense that 16,800 to around 16,900 odd level, that's going to hold out. The 17,000 put, that's a good amount of open interest. That has the highest open interest for this contract. That's for the coming weekly expiry as well as the bigger expiry that's later on. So that's telling you that there is some writing at that level. The problem is, yesterday as well, we saw aggressive writing at around that 17,000 call. The premium out there was around 250 rupees. It came down to around 200. So just punching in the numbers then, support is seen at around 16,800 to 16,900. And the bears are betting on that 17,250, 17,200 to 17,250 odd level holding out. In case we can get past that level, we are bracing ourselves for a big, massive short covering bounce. So just keep an eye out on that. And that perfectly ties in with the Nifty. The 20 DMA is what I'm looking at. And the Nifty Bank, I'm looking at the 50 DMA. Those are crucial levels. The starter is going to be in the green. Maybe if you get an intraday dip, well, you should try to buy the Nifty, maybe at least today, given that the dollar index has cooled off. And just one more point, HDFC Bank comes out with its set of numbers tomorrow. So that could be a bit of a mover for the Nifty Bank, in late trade today. So those are the cues that are stacked up. We are bracing for a short covering bounce. Will we get it? That's the big question.
It looks like that could be the case today, right? I mean, look at the Asian markets. Hang Seng is up over 3% right now. And I think one thing is certain, that this 200-day moving average of 16,980 is now a firm line in the sand on the downside. So it's a firm support for the market. But a couple of more things to watch out for. There is, of course, Bajaj Auto will be reporting earnings today, so we'll keep tracking that closely. There's a good quarter-on-quarter improvement in margins that we're expecting. On the volume front, not that great, but just keep that on your radar. And as Nigel was pointing out, tomorrow you have HDFC Bank that reports its numbers. Now, this time around, it's expected to be a strong one. There's a 15% NII growth, a 22% net profit growth that we're looking at. And in general, financials have been front and forward, so I'll look out for those earnings as well. There's also Tata Elxsi that reports today. Will be very interesting after Mindtree's solid beat, Infosys good numbers. Tata Elxsi is the next one to watch today. So we'll keep tracking all of these cues for you. It promises to be a hectic day and a day littered with green on the screen. So let's kickstart with a view coming in from Jonathan Garner of Morgan Stanley, who says that while US core and headline September inflation surprised to the upside in October, our discussions with clients suggest high awareness of global macro risks and exceptionally high cash positions. He also says that last night's price action in US equities, together with exceptionally low valuations, adds to our conviction that a major trough is forming for Asia and emerging market equities.
Well, on equities, Eric Fishwick of CLSA says CPI will prove sticky is already part of our US forecast. Accordingly, we make no changes to our Fed funds forecast in this release. He says a 75 basis point raise in November, 50 basis point in December, and a final 25 basis move in Feb. This forecast would be too dovish if we thought that the Fed would wait for inflation to fall close to target levels before abating tightening. But we think it is more likely that the Fed is looking for evidence that inflation and the labor market are behaving how its models suggest. Without this, its policy has to be reactive rather than forward-looking. Eric also hopes that slower growth will start to deliver the weaker labor market that is necessary for this to happen in the coming 6 months.
Okay, let's get you some money market views. Yesterday, the rupee closed at the 82.34 level. It ended marginally weaker ahead of the inflation data in the US. Here's the expectation for today. Bhaskar Panda of HDFC Bank says that the US CPI reading is suggestive of further rate hikes in the US. He says several Fed speakers prefer another large rate hike in November. As a result, he adds the dollar index was trading higher while we got a bit of a relief from oil as it remained lower. He said the dollar INR pair could take a bit of heart from lower oil prices and the fact that it recently has faced resistance. Given this background, he expects the dollar INR pair to trade in a range of 82.20 to 82.45 for the day.
Well, in the bonds, we've got Bhaskar Panda who says in India, the CPI reading was as expected and crude oil is still trading at a tolerable level. He expects the 10-year benchmark bond yield to consolidate within a range of 7.4 to 7.45% for the day.
Okay, we have a lot of stock-specific action as well that we're going to be tracking for you, and we'll get to that in just a bit in our top 10 segment. We're looking at Infosys, Mindtree, Angel One, Anand Rathi, Spark, HDFC Life, NMDC, ONGC, as well as Oil India. And all those stocks, they are on our radar on the back of positive news flow. And Cyan, that's the stock that's likely to open up in the red, the lone one actually.
All right, so that's what we have. Let's get in some perspective now.